Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hey everyone, checking out SPY on the daily, weekly, shorter term time frame. So you can see the volume just completely disappear towards the end of this week, and it started on Wednesday and then Thursday. Today was pretty much the slowest volume trading day in my recent memory, and we had 36 million shares traded, and back on the half day of Thanksgiving we had that many shares traded then. So extremely low volume, extremely low volatility, and you can see the trading range today. We had a range of about 51 cents. So certainly a day for sitting out if that is your cup of tea and you don't want to have the odds stacked against you like they were today. But either way, we have this tightening pattern continuing to form. We've got a holiday week, so we've got a 4-day week coming up, and then another 4-day week after that for the new year. So we have our high at 227 due to the dividend adjustment, our low at 224.04, lower high 226.57, higher low 224.92, and here we are right in the middle of that range, getting very, very tight. And decreasing volume is normal for this kind of pattern, but this is a bit excessive due to the holiday. So we are on the verge of that bearish MACD cross, not seeing significant follow through. We did close up at the high of the day of SPY here. We have one more week of trading left in the year, and if we see a break of 226.57, we're looking for a new all-time high, and if we see a break of 224.92, we're looking to head back down, continue consolidating, which would be normal and healthy. So pretty much it's a win-win situation for the bulls at this point, where we are either going to consolidate further, which is no big red flag. It would be a red flag if we lose this low of 217.87, or we break out to new highs and the bulls continue to stay strong. So the weekly time frame, the upper Bollinger Band, we did maintain that support. So we are still in breakout mode above 225.59. We did not confirm the bearish reversal doji from last week. We have an inside candlestick this week with a tighter range. And that range is pretty much what I just highlighted, just a different way of looking at it. So the inside candlestick on the weekly, and you look at it on the daily, and you can see it more detailed, but a clear tightening range forming. Looking at the 5-minute time frame today can show the lack of volatility, and each of these candlesticks is such a smaller range than we are used to. But either way, the bears took control in the morning, and then the bulls showed up and started setting higher lows and higher highs, and then that volume really came in at the end of the day. We saw a run up of pretty much 20 cents at the end of the day, which was significant considering the entire trading range of the day was 51 cents. So the bulls do have momentum heading into next week. And looking at the hourly time frame, we can see we did reject from this 100-hour moving average resistance. And let's look at it there. So rejection multiple times at the high of the day and then a little bit after pre-market, or I should say after hours. So resistance there is 225.70. We'll be watching that moving average resistance come Monday, and that tightening range, I should say Tuesday, that tightening range on the daily time frame is the level to be watching, because once we get a clear break of that tightening range, it will indicate where we are headed short term and will give some clarity on direction. So we'll check back in on Tuesday. Happy holidays to everybody. Hope you have a great break, and we will see you soon.